Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi guys, welcome back to Zacks Top Stock Picks of the Week. I am Daniel LeBeau. I'll be followed by Nina Mishra, and we have a couple of well-positioned stocks following this market correction, with S&P 500 officially dropping 10% off recent highs, which is something that it hasn't done since September of 2020. And this is something that investors have been waiting for, and it represents a buying opportunity, or at least an opportunity to start putting on positions in your favorite stocks. One of my favorite stocks is TSMC. Taiwan Semiconductor Manufacturer is the leading chip maker in the world, and it is trusted by top chip innovators like Apple, AMD, NVIDIA, Broadcom, and a number of other leading innovators of this new technological renaissance that we are entering, the fourth industrial revolution. TSMC is proving that the semiconductor market is more than a cyclical play. It is a secular growth outlook. There is, should I say, a secular growth outlook in this market that TSMC is capturing perfectly, with the demand for these next generation chips never being greater. TSMC not only makes up 57% of total manufacturing in the semiconductor space, but 85% of the innovation in this space as far as prototypes and chip innovation goes. And the company, like I said, is trading sideways, or has been trading sideways for the last year, and its fundamentals have only done nothing but improve. So the stock, like I said, is trading at a valuation discount, and I would not hesitate to jump in after a tremendous Q4, and not to mention the latest news that Intel, its previous competitor, will now be utilizing its 3-nanometer transistor facilities up in northern Taiwan, which is a huge sign that TSMC really is unmatchable in the fabrication of chip technology. So let's take a look at the charts and take a look at the opportunity here. Taiwan Semiconductor, this is their stock on TradingView.com, ticker TSM. You can see this company has just exploded since the pandemic as investors finally realized the value that its best-in-class, cutting-edge manufacturing capabilities really provide. It was previously seen as nothing more than a commodity company that could be easily replicated, but when they realized that no one could match the atomic scale at which TSM works at, they started flooding in, and with this digital adaptation of 10 years in a matter of 10 months, the pull forward in demand for chips has never been greater, and it's not going anywhere anytime soon. But we've kind of traded sideways since this huge jump off the pandemic lows, and even off the previous highs that we had of about $60 a share in the pre-pandemic world. But we're trading over double where we were in 2019, and I think that we are headed way higher. You can see after this blowout earnings report, we exploded, hitting 145 for the first time in the stock's history, but the recent pullback in tech has also dragged TSM down nearly 15% off this high of 145. Right now, I'm looking at price targets on this thing between $150 and $200 a share. The upside is huge, and this thing is a profitable machine of margin expanding growth, with 20% top and bottom line expansion in 2021, and expected to do the same thing in 2022 as demand does not slow down. And their ability to meet this demand is honestly unparalleled. Right now, we're looking at a level that we're bouncing off of right around 122, just south of its 50-day moving average here. Or sorry, this is the 50-day moving average right in the orange here. So this is a great entry point opportunity for this stock, with the fundamentals looking stronger than ever. And right now, it is trading at a price to earnings of right around 22, I believe. Let's take a look on Zacks research tool here. You can see that analysts are becoming increasingly optimistic about the outlook, pushing all of their EPS estimates along with price targets, driving the stock into a Zacks ranked strong buy. So this is a 5-year chart, and this is down here is where the markets are pricing this thing as a commodity company. And we're kind of coming down to that valuation right now with the latest tech sell-off. But honestly, this thing is is really undervalued at its current levels. I mean, we were trading up about 30 times price to earnings back in the beginning of 2021, and I think we're looking at a discount here. And I would definitely start a position in this leading company. This is a company that you want in your portfolio, as it is going to be leading us, ushering us in to this this next generation of digital explosion within the Roaring 20s. So thanks for watching, guys, and I'll hand this over to Nina.
Thanks, Dan. And I do like Taiwan Semi because it is a very unique, very powerful company with a very strong position in the global supply chain market. And we have seen all these disruptions and in the chip supply. So that is why Taiwan Semi stands to benefit a lot. My pick today is Costco. The ticker symbol is COST, C-O-S-T. It is a Zacks rank number 2, a buy ranked stock with the style score of C for value, but A for growth and B for VGM. I have picked Costco because Costco also has a very strong position in the market, and their market share continues to grow, and they have the pricing power. So in this environment of rising inflation, when investors are concerned about inflation, and because of which stocks are experiencing a rocky ride currently. So companies like Costco, they are better positioned to perform well in an inflationary environment because of their pricing power and large and growing market share. So as we know, and this is from Costco's investor presentation, Costco operates membership warehouses. It's the 3rd largest global retailer currently and 12th largest in the Fortune 500. And in fact, I believe that it is one of the best managed retailers in the world. Now, it currently has 828 warehouses, slightly up from this number, most of which are in the US and Canada, but globally too. Now, the company reported excellent quarterly results recently, and if you go to the detailed estimates webpage on our Zacks.com code page, you will see that company delivered 14.7% EPS surprise, and they beat not only on the top, they beat both on the top and bottom lines, and the results were also much improved year over year. And this was the 3rd consecutive positive surprise delivered by the company. And you will see that analysts have been raising their EPS estimates for the company since they reported their results. Now, another reason why I like Costco is that they have been investing a lot. Their capital expenditures have been rising. In fact, the company expects to invest about $4 billion during fiscal 2022, which ends in August this year, and which is up about 10% from 2021 and up about 42% from what they spent in 2020, and that they are doing to open more stores, and they are also investing in the e-commerce structures. So that is why we saw that recent results were pretty good, and in particular, while their sales and margins have been rising, we have seen that e-commerce business has been doing pretty well. And in fact, they did state that they have been able to manage these supply chain challenges much better than some of their competitors. Costco pays a decent dividend. The dividend yield is not great, but a decent dividend of 3.16 annually. And they have been consistently raising their dividend. That is another reason to look at Costco, because they have very strong cash flows and a solid balance sheet with strong cash position, and which makes them well positioned to not only manage these challenges but also return cash to shareholders. So Costco is worth a look.